Well, we're getting down to the wire. Um, I've seen a few more final projects. People have turned them in, turned projects. I understand other people are just going to send them in. That's fine as well. I'll put out the paper to make sure we get the remainder of the homework handed in. Um, the term paper, the homework, all that stuff is due before you start on the final. And also check through your records, make sure there's no zeros on anything. I'll go through and try and get up to speed on grading the remaining items. But if you have a better grade than you think you should have, and you didn't hand in some items, keep in mind that if you have items that were not turned in, those will go to zero. So not a good thing. At least turn something in. Make some attempt at the term paper if you are completely overwhelmed and can't get it done. Something's better than a zero. So anyway, other things that I think are kind of important that really aren't touched on in the class, and we'll talk about some of those tonight. Gold, silver. Gold is up now. But still comparatively, I've held some gold before, but anyway, I don't know that it's each to his own, but I don't think it's necessarily the way to get forward. And a lot of marketing, a lot of hype is put into gold. That is for sure. Typically old or at a different generation, though. I think the younger generation is I think gold may go out of fashion a little bit. Who knows? But I think the younger generations are much more eager for other types of investments, perhaps crypto, perhaps not. But anyway, collectibles, speculative stocks. So again, stocks that are just pure risk and kind of away from investing. Cryptocurrency I already talked about, and then kind of my favorite two would be in terms of a store of wealth would be real estate. And keep in mind, all these things are predicated on you got to stay ahead of inflation. We've got some issues out there. The problem is this chart kind of shows you where things are. And so when I sort of badmouth bonds or haven't emphasized bonds, there's kind of a reason why I haven't. You can see their relative strength. That's not going to work for you. The dollar holding cash, something like 38% of all the money created has been created in like the past 18 months. It's literally ridiculous. Gold, yeah, it's up a little bit. So let's say we move the blip up to here. Is that going to do it? Perhaps not. S&P 500, so Standard & Poor's 500, kind of a broad range. And again, this is getting kind of historical because a lot of these hot tech stocks, Google, Netflix, Amazon, Facebook, they definitely outperform things. And then, Bitcoin. So, and not all cryptos, not all stocks are created equal. Especially if you've got some hesitancy about crypto. Number one, this is probably not the time to jump in. Bitcoin goes in a cycle, and if you jump in now, you'd be doing what they call FOMO, fear of missing out. Perhaps getting in at the wrong time. It's great for somebody like me because, your greed will catch up with you and you'll stay in longer than you probably should, and maybe you'd get some sort of gains. But somebody like me who's already got targets out there, and I'll be starting to exit, at a certain point because, got in earlier. So anyway, if crypto does hold to its thing, or Bitcoin at least holds to its thing, it's a 4-year cycle. And right now we're coming into Bitcoin summer with the halving happening literally like next week. And so probably not the time to jump in with both feet right now. And with most stocks and most things, I've mentioned dollar cost averaging, where you get into things kind of gradually to minimize the effect of having to time the market. So anyway, a lot of things going on. We can get into the macroeconomics. The U.S. has got some serious economic problems. You've got, the older people who I've mentioned do vote, and they've got a lot of money in equities, and if their equities were to decline, that would be very bad. So they would kind of panic. It's far easier for the government just to print money, keep the equities pumped up, even though the true value, the worth of those equities is going down. Inflation's kind of insidious. People don't notice it. So it's really the debasement of the currency is what we're seeing. So even though things like Bitcoin look like they're going up, they're good gains. Don't get me wrong, but when the dollar is being debased, they're not as good as they would appear. And if you're holding dollars, yeah, you're just getting clobbered, and even gold to a certain extent. So, money supply, I'll kind of emphasize it. It's almost gone off the chart. That was 2015, and getting into 2020, and it's just it's a lot of money in there. Okay, so we talked about why you kind of need to invest. I mean, there's you may hear the saying that basically poor people spend because they have to spend to get by. The middle class kind of saves, and the rich invest. They're thinking more long term because they have the luxury of having the excess money to do that. So anyway, you can get very in depth on what's happening with the currency, what's happening with the economy, but big picture is we can't necessarily change it from where we sit, but we do need to kind of protect ourselves. Collectibles. Some people, may have a real skill, and they may have, maybe some skill in antique firearms or something like that. Or there's even, you hear the advertisements out there for fractional art. People buying fine art as an investment, and some of those things may not work. You have to do a lot of due diligence. You have to do a lot of research to find out if it's appropriate. My problem is whenever I've come across collectibles, not only you've got the custody issue, you've got to actually get something authentic, and then you have to protect it, and then you have the liquidity. So liquidity, again, as we know, is trying to move it along. So could be a good investment, but you see a lot of these investments, classic cars, for example, man, they fluctuate based upon the economy. When people have excess money, those type of things go way up, but in hardship times, just when you kind of sort of need the cash, the value of those things plummet because people can do without. So anyway, like I say, I've been throughout the Middle East and Afghanistan, places like that, and most of the stuff I came across was, the jewels certainly were, for the most part, counterfeit, and the rugs, the Persian rugs, and some of the beautiful handmade things, they were more of an art piece than an investment, but they do hold their value if you get good ones and you have the skill to know what's in demand, and you have a market where you can sell it if you wanted to. Speculative stocks. So pump and dump. You can't trust people anymore. People, well, you never could, but now they can orchestrate pump and dump on such a larger scheme, and they'll try to go down in the penny stocks because they're not regulated by the Securities Exchange Commission. They'll prey upon people with get rich quick, 1% a day, 10% a month, something like that, and doesn't always work. Futures and options. Futures and options, they definitely have a purpose. We haven't talked too much about futures contracts and options. Options are actually a bit safer than futures because with a futures contract, you literally have the obligation to deliver the product. So the word futures, just a quick description, since I don't know that we did talk about it. Let's say you're an airline and you want to set your fares, you want to sell your tickets a year out. Well, jet fuel is a huge variable. How do you set a ticket price, and it's a very competitive environment, you want to know down to the penny what your profit's going to be, so you can kind of lock that in, and you can sell your tickets for, a low enough price. But if jet fuel goes up, you don't want to have to, fly people all over the world, make a commitment a year out, 6 months out, and then find that you can't do it because of the fuel price. So a futures contract, the way these things originate is let's say you're an airline and you want to start selling tickets for, next fall. You can buy a futures contract for October delivery of jet fuel. October 2024 delivery of jet fuel, and I don't know what jet fuel is going for, but let's say it's $6 a gallon, and you can agree to pay $6.15 a gallon for October jet fuel, and if prices stay the same, that person on the other side of the trade is going to be able to buy that jet fuel for $6 a gallon. Perhaps it'll be a little less, and he's going to deliver it. So you, as the airline, can now go, okay, I know exactly how much this fuel. I've got a contract, a futures contract for whatever delivery of 1 million gallons. They usually do pounds, but anyway, we'll just pretend that they do it in gallons of jet fuel for October delivery. The person on the other side of that trade who accepted that contract has to make good on that. And if fuel prices drop to $4, he's going to make a killing. If fuel prices go up to $8, he's going to lose more than, it just gets inconceivable. An options contract is kind of the same sort of principle, except it's an option where you have the right but not the responsibility to purchase. So it can be used in stocks, but it can also be used, say, in real estate. Let's say, you really want to buy your neighbor's house, but you don't have the money right now, and he's going to put it on the market, and so you want to sort of lock that thing up. And so you say, you approach him, you get a lawyer or whoever's going to write up this contract for you, and so let's say the house is worth $500,000. You'll say, I will buy this home for, $525,000. I want the option to buy this home for $525,000 6 months from now. And in consideration for that, you give them some sort of premium for, this person to not put the thing on the market, because you have an option. You have the right, but not the responsibility. Let's say things don't work out for you, or house prices fall, and you could have bought that thing for $475, and you no longer want to buy it for $5.25. You can just let the option expire worthless. Or you could actually, let's say house prices go up, you do have the money, and then you can go ahead and execute and buy that home for $525, regardless of market conditions. If prices went way up, your neighbor is still obligated to sell. Well, anyway, you can do that same sort of thing with stocks. But anyway, any of these more complex moves, and you'll see a lot of people this is where people get burned on Robinhood. They'll have these trades, and they'll have options that they pay a premium for, and they'll have usually pretty short times in which the price needs to move to become profitable. And so guys can make a killing, or they can get cleaned out. So anyway, margin trading on stocks is kind of the same thing. All this stuff is sort of, we're not into investing, we're into speculation at that point. Cryptocurrencies, Bitcoin the new gold, perhaps. I guess you can kind of tell I'm kind of a proponent of this stuff. There are 21 million Bitcoins that will be mined, and that will be it. Now, you have other factors that make Bitcoin maybe a bit more risky in terms of, the government regulating to just outright ban it, or some sort of other government type action that could really devalue it. But it got a lot safer round about last September and then into January. What happened last September was they decided they could do a Bitcoin ETF, and then they actually started it in January. And so now it's not just the retail investors, the small guys who are involved in Bitcoin, it's the big boys. You know, you've got BlackRock, you've got Fidelity, you've got all these people who have got a lot of money and a lot of clout with the government. And so those things are probably not going to happen anymore. The problem with gold, and not that there's a problem with gold, other than the fact that, you know, a lot of these heavily marketed gold things are, they sell the gold at a premium. So not only does the gold have to go your way, but you also have to cover that difference, that higher price you paid because you bought it through, you know, some third party. The other problem is when gold starts to go up in price, miners come out of the woodwork. You get more mining action going on, and so the supply of gold is not finite. It can be mined. It's still a rare item, but anyway, gold is not bad. But will Bitcoin replace it? Who knows? It's more of a generational thing, like I said. Younger folks are more will embrace cryptocurrencies more rapidly. Well, they have than older folks, but we'll see what happens. A lot of different things, and anyway, stay away from all the meme coins. Stay away from the leverage. Stay away from all that other stuff. And I mean, Solana, Ethereum, those things are maybe all right, but there's a lot of junk out there that's even worse than speculative stocks. So, but that's where the yields are right now. Bitcoin cycles. So yep. And there's the halving event that's happened somewhere, and then the parabolic phase. We'll see. You know, but when you look at these charts, these are not superimposed over one another. They are independent charts. So pretty high probability that things are going to go north. Real estate, amazing asset. Number one, just sort of the lifestyle part of it. You know, having a bunch of money in the bank would be fun. You know, it'd be interesting to look at. But can you enjoy it? Can you, you know? Now again, I get in this discussion with my nephew all the time, who's just so excited his house price is going up, but he only has one house. You know, which good enough. But the fact that it's going up in value, he can't sell it. And if he wants to move to a bigger house, that bigger house is going to be even more expensive. So, you know, but if you're investing in real estate, and I'm not saying not to have a nice big home, but when it goes up in value, that doesn't do much for your bottom line. It does increase your net worth, but increases your taxes and stuff. From a financial perspective, having extra real estate that perhaps you could convert into, you know, just whatever, could be converted into other types of investments is not a bad thing. But the real thing about real estate is the safety. I mean, now we're talking, you know, if Bitcoin's limited, well, real estate is that on steroids. Definitely. Inherent, yeah, it's when assets inflate, so does real estate. So you're you know, the tide's rising, but you're floating on top because you've got an asset. You're not sitting on the sidelines with cash drowning, and then enhancing your life. So big fan of real estate, but not all of these things, these don't have to be binary decisions. You know, what I've done, and it all depends on the timing, but when I have made money in real estate or in the stock market, you know, far exceedingly high gains compared to real estate, but they're, you know, kind of ethereal. They may not last, and so if I do happen to luck into a good stock trade, I will try and secure that into real estate as soon as possible to basically, you know, get off the roller coaster and get some stability. Okay, forms of business. If you are, a lot of you may find that you want to be self-employed from the get-go, or you maybe want some sort of side hustle. You need to know a little about about business ownership. I kind of alluded to this in terms of liability. The worst case scenario is the sole proprietorship. That's what most businesses are because it's dead easy. One owner, you're just taxed on your regular taxes. This is a problem. Unlimited liability. And, I mentioned before about, the ladder falling off the truck, and they can take everything, because it is all tied back to you. You've got no liability protection. Your personal assets are definitely at risk. It's easy to start a business like that, but it's also very easy to stop. You die and the business goes away. It's tied directly to you. So that's a huge problem. You're not setting your heirs up for something in the event of your untimely death. Partnership, I'm not a lawyer. I'm not going to go into too many details here, but it's only slightly better. But my problem is it's a partnership. And, what's the success rate of marriages? They're a partnership. How's that working? So I like the flexibility of a corporation. Now, these could be like a limited liability company or something like that. This one, they're actually having shareholders. So this gets more involved. They do have limited liability because they're a corporation. The corporation, people hate this, but a corporation has personhood, can be sued in court, can be whatever, but the assets of the corporation are limited to that. So S-Corp, I used to have one of these. It was overly complex for what I needed. It's a way to pass profits through that, again, is beyond the scope of this. But limited liability company, still have one of these or two of these. Or I've actually started some nonprofits as well. But anyway, that's a different story. But LLC is dead easy. You can go on to the State of Alaska website, pay about $250, bada bing. You got your LLC. You don't have all those sole proprietor issues I talked about. Very flexible, and avoid this personal lawsuit. It depends what kind of business you're in, but you'd be surprised. And these are the lawyers who have told me, regular sole proprietors just scare the bejesus out of them. But most people who have a sole proprietorship, they don't have a lawyer. Because if they did have a lawyer, well, anyway, those things are really not compatible. Any lawyer, the first thing he would do is say, don't do that. So, this is just kind of a recap. Small, 3/4. And I don't want to say lazy because it's kind of pejorative, but yeah, that's what it is. It's a ton of sole proprietorships. Some partnerships, and then C Corps. Now, by money, the C Corps, these are the big boys. These are the ones that are publicly traded for the most part. Huge, huge. But in terms of numbers, not very big. So, yep. Tax individual rate, easily dissolved, perhaps too easily. Disadvantages, unlimited liability. That's the end of it. You're not an enduring business structure, so do they really want to make loans? You're not displaying a whole lot of business acumen by even being involved in a sole proprietorship. They're going to be like, yeah. Anyway, taxed a little higher. Partnership, some advantages. But anyway, I never quite done that. States management duties, articles of partnership. Sounds like marriage with somebody that you don't have a relationship with. Advantages of partnership. Yep. Disadvantages. Whoops. Unlimited liability. So that's probably enough for most people. Depends what you do. I mean, I used to have a campground, and people have a propensity to drink a lot and jump on four-wheelers and run into things, and for some reason, if they were at a depression, that was my fault. Anyway, well, I never quite got there. I closed the campground before all that happened, but that would scare the death out of me to have unlimited liability. Yeah. And then the partnership, tax purposes. Corporation. So everything's completely separate. They have the power of person, can be sued in court. Yep. And this is really where the money is, the income is. Smaller in numbers, but the big companies are generally incorporated. So we know about stocks, we know about dividends. Creating a corporation, you can actually, by mistake, the first time I created a corporation, an LLC, I ticked the wrong block and ended up creating a C-class corporation, which I quickly undid. But yeah, you can do it on a drop-down menu. A lot of these corporations you'll find are incorporated in Delaware, because Delaware is very famous for being not consumer friendly, for being very corporate friendly. So corporations, they don't want to have to deal with lawsuits and things like that, and they wanted to be in a corporation or in a state that's very business friendly. So anyway, a lot of the credit cards used to be located there too, because they just were not consumer friendly. So domestic, foreign, alien, we're not going to go there. Private corporation. So let's say, there's some good companies out there. For any of you who have drone type stuff or things like that, DJI is a pretty darn good company, but they're private, right? They're a corporation, but you can't go buy stocks and shares. If you want to invest in those guys, not going to happen. Now, sometimes they'll take a private corporation, they'll take it public through an IPO. And anyway, and this is where, it's kind of whatever. Investment bankers are involved, and they do this initial public offering, and they got to set a stock price somewhere. A lot of people want to try and get involved in it, but at the retail level for, sort of Joe Sixpack and regular people, it's very tough to get in. You can get in the day of the initial public offering, but you're again not buying shares direct. You're typically buying them on the secondary market, where the price is already inflated or deflated. And then public corporations. And then nonprofits. There's a lot of, it's a good PR thing to have a nonprofit, but again, the lines, the people who make a great deal of money, especially in terms of salaries, are often working for nonprofits. Nonprofits can be personally quite profitable. And so when I started one up, the IRS actually, they thought it looked like I was in it for the profit, and so they disallowed it. But if I would have been a bigger entity with better lawyers, it would have been greased right through. But anyway, so we're not going to spend too much time on this, but it does get a little bit more involved if you're going to have a big corporation, a C corporation. Preferred stock, we talked about preferred and common stock. Not that important. These are just some slides that are included. I didn't want people to see a bunch of gaps. Advantages corporations, again, the limited liability, go on forever, potential to expand, because especially on a C one where you can sell stock and make your entity bigger. And it's just a big, entity that's stable, and getting funding is quite easy. You get various methods: bonds, stocks, even private loans if you want it. Disadvantage, if you're have a corporation, your corporation, since it's got personhood, will be taxed. Then they pass the profits on to the shareholders, and then they get taxed again. So that can be it. Expensive to form, depends on the complexity of the corporation. But yeah, if you're doing boards of directors and nominations and lawyers and stuff like that, that can get pretty involved. But in terms of actually creating the entity, about $250. So, yep, a lot of public information on there, and owners and managers not the same, can have different calls. Disney's going through a crisis like that right now. joint ventures, exactly what it sounds like. And then S corps, it has to do the way the profits are passed through the corporation. But again, that's more of a taxation issue that you'll get to if you go that way. And then an LLC. This is a pretty accurate statement. Considered best blend characteristics of corporations. So that's why an LLC is quite popular. Cooperatives, those are typically like an agricultural type things. You know, where they need a creamery or something, and all the dairymen, it's all in their best interest, but nobody wants to necessarily own it directly, so they get together and they form a cooperative. All right, so that kind of goes through business formation. What you should take out of that is, if you're in a sole proprietorship, you probably shouldn't be. You should probably speak to somebody who's qualified, like a lawyer or something like that, and get advice from them, which will probably be to form an LLC. And then the other forms, again, I'm just trying to, if you do get involved in this, kind of stay away from the lazy, easy choice of forming a sole proprietorship, and talk to somebody, and they will probably steer you towards the LLC. So real estate purchase process. Real estate purchasing is probably your biggest investment, probably your biggest purchase, and a lot of different factors. If you haven't done it, it can be a bit overwhelming. Searching for a home, really, before you start the search, this pre-approval is key. You need to, figure out what you can afford. Nobody's really going to want to work with you. The real busy agents, the good ones that you would want to deal with, they're not going to want to deal with you until they know exactly what you can afford. Then once you know where your money is, then the location. I don't think I've bought a non-waterfront property in some time, at least since 2010. But that's just the thing. I mean, you want to be kind of on the edge of things. I've had homes that were on the edge of a golf course or on the edge of a big green space or something like that. I'm not a subdivision guy, and I don't think a lot of people are. But anyway, what you're doing when you're purchasing a home is, in essence, you're kind of purchasing something for resale, because at a certain point you're probably going to be moving away from it. So if you're looking at something that's too unique, or that's just perfectly tailored for you, but your tastes are maybe a bit out there, it might not be the place for you, because, let's say, for example, you love this house, but the schools and the neighborhood is just not good, but you don't care because you don't have kids, and, well, your renters or the people you sell this house to probably will have kids, and the value of your place is going to be somewhat less based upon the substandard feature, whatever that is. The other thing is, in Alaska, I had a real estate license here. I've let it lapse just because I could talk to you about that business, but it's a little much. You gotta have a certain intensity, and I tend to do a variety of things, and so that's not a good fit for real estate. There's a couple, probably 1% of the real estate people do about 95% of the business, and then there's a lot of kind of also ran kind of people that are just kind of in it. But the real movers, I mean, they are intense. When I was doing it, my mentor, who was phenomenally successful, you'd probably know her name. I would say it, but anyway, she told me I needed to get rid of my dogs because she said, you don't have time for that. I'm like, I'm in kind of a place in life where my priorities are not to, work 24/7. So anyway, they call them licensees up here just because of lawsuits and other things that have gone on. Alaska's got, for a relatively small state people-wise, man, there's a lot of corruption kind of stuff that goes along. But anyway, that was based upon a lawsuit back when. But if you're looking for a home, you're quite, it's quite advantageous to consult with an agent because you're not paying the commission. The seller's paying the commission. So, and I can talk to you about for sale by owner. Generally, they're overpriced homes. I'll go out to somebody to list their home. They'll say they want $500,000. It's like, this is not going to sell for $500,000. They're like, screw you, I'll sell it myself. And so they put it on the market for $500,000. So I've got some land on sale right now that I wasn't even going to list through the MLS, but I decided to. But I'm asking a fair amount for this property. It's a great piece of property, but based upon the previous sale, they're probably going to think it's too much. But hey, I'm fine with that. If people don't want it, then again, real estate's not liquid, and the market will grow to give me the price I want. I'm not going to sell early. Zillow, Redfin, some of these online things, they don't necessarily work in Alaska because of just the nature. The numbers are not as high, and also you don't have to declare what you buy and sell a home for. Most states, you have to, it becomes public record when a home is bought or sold. That purchase price is recorded and published. In Alaska, being a non-disclosure state, that's not out there. That's not out there on some database. So Zillow and these folks are largely guessing at what things buy and sell for. So just like the auto things like Kelley Blue Book and Edmunds are kind of out to lunch up here, so is Zillow. The other thing about having an agent is, since that's in their livelihood, and if they do go to court, since they're a professional, they're held to a pretty high standard. So they really don't want to mess around with doing some shoddy stuff. And if a seller is selling a home and they don't disclose something, it's bad when it's a for sale by owner. But if it's a property that's where there's real estate agents involved, it's really bad. The real estate agents, it's probably going to come out of their pocket. So they really want to make sure if there's a problem with the roof, a problem with whatever, that they disclose that. So, homeowners association, yeah, love them or hate them. It's yeah, but there you do come across some things where people, you find out your buyer's super sensitive that you didn't disclose that there was a murder or a death down the road that most people wouldn't care about, but certain folks are very, very aware of. Appraisals are kind of a funny business. It depends, if you're selling a home within a subdivision, and appraisals are a pretty straightforward thing, but any property I've bought usually has more property associated with it, and there's no like sales, and anyway, and then you'll also find that when appraisals, because appraisers, they want to work with comparable sales to establish the price. So recent sales. If there are no recent sales, if there's not a lot of volume in that particular type of property, then there's not a lot. Also, the appraiser has access to your offer price. They know what the contract price is. They're given that by the agents. So let's say you're going to buy a home for $350,000 and it appraises for $350,000 miraculously, and you're like, wow, I feel validated. I got it right at the perfect price. Nah. They said, yeah, okay, that's close to that price, and they pencil whip it and good to go. Anyway, I know there's probably some appraiser out there right now going, that's not how I operate. Whatever. The evidence is different. Inspection. This, again, as a salesperson out there are certain inspectors you wanted to use because they would find everything and you knew your buyer could handle it. And then there were other buyers you had who were just nervous about the whole process, and you used one of these, deaf and blind inspectors who wasn't going to catch anything and not make the people nervous. Anymore, I think what you want to do is I've used an engineer on my previous home inspections. Sometimes maybe it cost me a couple $100 extra, but with the amount of earthquakes that most of these structures have gone through, it's not a bad thing to get sort of a structural review that's well beyond the scope and the competency of your average home inspector. You know, a lot of these home inspectors are looking for, oh, the wiring, the ground on this one plug is not right or something like that. Yeah, that's kind of small. I mean, it's a safety issue, granted, but it's not the same as the structure being unsound. So I'm more in I want some return for my money in terms of the inspection. I want somebody who's actually going to be able to look at the structure and give me a pretty good report. Loan approval and commitment. So you did your pre-approval, and now, especially post 2007, 2008, things have got a lot more stringent. But it's, I don't know that they disapprove or approve anymore, but it's just a lot more paperwork. But once you're there, you get the loan. Now you're trying to lock in an interest rate. That's what's kind of hurting real estate right now, is the interest rate situation. There's not as many buyers in the market, but hopefully rates will come down, and but the current inflation data is not showing that. There's supposed to be 2 to 3 rate cuts this year. The Fed is really in a bind because they want to lower the rates because they're political people and there's an election coming, but they want to keep the rates whatever. They're in a bind. Final walkthrough. So you go out there and you look at the property. And sometimes you will see, I mean, there was on one of the properties I was buying, there was a floor was not quite right because it had some water damage, and it was a nice hardwood floor. And I went there 2 days before the closing, and they were replacing the floor, but they were replacing it with some sort of laminate garbage. It's like, no. So, I was able to intervene, and they get the proper flooring and put it back as it should. But once you own the home, you're not in a strong position. Prior to closing, you are. The closing. So what should happen? The closing should just be an event where you go in there and you put some signatures because you've discussed all of this beforehand. If you're walking to the closing and getting new information, things have gone horribly wrong. Okay? You're going to be so overwhelmed with reams and reams of documents. And all these documents are meant to kind of scare you a little bit. They're, HUD documents. Housing and Urban Development, federal documents that show you exactly how much your loan will cost you over the course of 30 years, and some of those other things that are kind of hard to wrap your head around in minutes when you're trying to sign a closing, because you've got an appointment and they're shoving documents in front of you. And anyway, those should have been provided to you a couple days beforehand, and any of your questions about interest rates and all that other stuff should have been settled way beforehand. And the closing, once it's started, they've got these dated documents, so they don't want to delay things while you say, I need a bit more time. No. So, anyway, if you've got a good agent, they'll make sure things are lined up, and, they'll make sure there are no surprises, and the closing ought to be the, happy event that it was intended to be. The term project. So, I've got a few more questions in addition to papers, but yeah, this thing is supposed to be tailored to your situation, very similar to what you think you're going to find yourself in. Again, I don't need your personal details. I'm not trying to be some voyeur and see exactly what you have planned, but I'm saying this plan needs to be something that's useful to you. Okay, the grading part will take care of itself. If you hit the page content and I can tell you've done something that's tailored to your situation, that's going to get you a good grade. Formatting, I really don't care. I mean, obviously we're not doing, whatever, cursive or whatever. It's going to be typed. It's going to look somewhat formal, but don't pad your, trying, I got 5 pages because I've got a title page and I've got something else. I mean, if you're that desperate, get out there and don't overdo the screenshots, but you can certainly go into any of these mutual fund sites, Fidelity, Vanguard, T. Rowe Price, whatever, and go in their retirement section and hopefully learn a little something. And when you see something, a graph or chart that applies to your situation, there's no problem augmenting your paper with something useful, and but address the relevant topics. What's your forecast in terms of your life? Or what type of insurance do you think you're going to get? How much reliance are you going to have on Social Security? What's going to be your strategy? Because you're going to be in some turbulent times. So anyway, enough said on that. I'll do another review before the final exam. So the final exam shouldn't have you too stressed. If you like the midterm, you'll like the final exam. It'll be the same sort of format, and more details will be covered on that. But you won't need to do a proctor or any of that kind of stuff. So I think we should be pretty good. And if you have any questions, let me know. But again, to reiterate on the term paper, make it a useful tool, a kind of a roadmap, a plan. I realize most people don't know what's going to happen next week, but if you put forward a plan, then you have something to work with. If you just, again, I've talked about, kind of my background flying fighters. You would see guys who thought that they would just figure it out when they're in the air, and it ended up horribly wrong. People who had a plan, when things went absolutely the wrong direction, something bad happened, they just altered their plan. They didn't have to come up with a plan. They adapted and overcame. People who just thought they were gonna do it right there with no plan, no chair flying beforehand, they didn't do well. So anyway, the same's true in life, but on a longer scale. Good luck, and look forward to hearing more.